argument for corporate income tax reduction is that the Philippines has the highest tax rate in the ASEAN. While it is true, countries with low rates have other sources of revenues which our country do not have at the moment. In Thailand, for instance, they have roughly 14 billion pesos from state asset sales. On the other hand, the Philippines earn 2 billion pesos only each year doing the same. In Singapore, their government earned around 700 billion pesos from tourist receipts alone compared to our 220 billion pesos collection. Indonesia has a lot of mineral reserves. They earn 33.59 billion US dollars in mining revenues alone, while the Philippines earn less than 2 billion US dollars. Meanwhile, Malaysia is an oil exporting country and has a lot of revenues selling petroleum products. Lowering corporate income taxes is positive for investors. So, we can expect increase in foreign direct investments. More investments means more demands. More demands means higher revenues. The question now is, are we ready to cut corporate income tax to boost our competitive edge?
We would like to thank.
Let us now analyze the corporate income tax rate of the ASEAN countries. As you can see in the graph, our country has the highest rate in the region with 30%, followed by Indonesia and Malaysia with 25%, while Thailand and Vietnam has 20% and 22% respectively. Singapore, which has the highest foreign direct investment among its neighbors, has even the most attractive income tax package at 17%. Take note, Vietnam outpaces our country's tax effort with only 22%. Our high corporate tax rate of 30% hinders our competitive edge. A look at the trends in corporate income tax in the ASEAN shows the overall decrease in the rates over the last 15 years. Most ASEAN members impose general corporate tax rates that are within a few percentage points of 23% on the average. However, our 30% rate is nearly double the 17% rate of Singapore. ASEAN nations have and will continue to respond to prospective investors with the manipulation of tax rates to compete with their neighboring countries. Last week, Attorney Benedict Tugonon discussed with us the position of the Tax Management Association of the Philippines on lowering personal or individual income tax. Today, we invited him again to share his insights on corporate income tax. Attorney, are you in favor of the projected corporate tax reform of the Duterte administration?
Okay, the reduction, the proposal to reduce the corporate income tax rate to 25%.
Currently, it is
30%.
30%.
There is a proposal to reduce it to 25% to make the Philippines competitive and attractive to foreign investors. The reason for this is because the Philippines, at 30%, we have the highest corporate income tax rate
In the
our
region?
region.
Wow.
So, reducing it to 25% will make the Philippines a competitive country. From the perspective of foreign investors who would want to come here to invest. But when I had a chance to attend the business leaders meeting in Davao, and if you listen to the
Discussions.
proposal,
Yeah.
the official proposal which the business leaders presented to
The president.
President Duterte at the time, the proposal is even to reduce it even below 25%.
Oh, wow.
If only to make the Philippines really more attractive to foreign investors.
Yeah, actually, here in the region, we are already left behind because most of the investors, especially the foreign direct investors, would like to choose. Of course, they are always after profit.
Yes.
And they would like to choose which is a lower rate of corporate income tax.
Exactly.
Will there be more foreign direct investments if we will lower the corporate income tax?
I was able to listen to a presentation last week wherein there is really they said that when you lower the income tax rate, it has an effect on the increase in terms of the
Investors.
not only the investors but the economic activity.
The economic activity.
of the country. So that is what is really that is among the objectives of the reduction of the corporate income tax rate, to really attract foreign direct investment.
What do you think is the most realistic or practical rate of tax for the corporations to make it more competitive and attractive to foreign investors?
I think the 25% is a good rate. We will simply match it with the highest income tax rate in our ASEAN region.
So right now, the highest rate in the ASEAN region is around how much?
25%.
25, that's already the highest
Yes.
compared to ours,
Yes.
which is one of the highest. We have the
Yes.
highest.
Mhm. So if we only match it with the highest, although we have to restudy that again later, because the other countries or neighboring countries, they're also reducing
Reducing it.
Yes, further, reducing it further.
Okay. Since the tax reform is a priority of the President Duterte's administration, when do you think is the earliest time this policy can be implemented or realized?
Okay. I think as already
Announced.
stated,
Yeah.
announced by the Department of Finance, they will submit their proposal come September.
September,
So that's just a proposal to Congress. But this is the reality. When you talk about reducing the tax rate, the reality is in legislation, you cannot simply have a rate reduction
yeah.
that will cause all whatever negative effects.
Yeah.
So you have also to think about the revenue passing
Yeah.
measures. So the key here is to have a balance.
So you reduce the
proposal.
rates.
You reduce the rate, there will be corresponding revenue loss there.
Yeah.
And
Look for
you
other
also
sources.
look for other sources of revenue.
Yeah, to augment the loss.
Yes. So if you can strike a balance and this balance is acceptable to Congress, then with the overwhelming support of the President, I would say that it's really possible to have this, at least some of these changes coming even before the end of the year.
Wow.
Because if you simply want to adjust the tax bracket
Yeah, that's
for
easier.
income tax, that's
Yeah,
easy
yeah.
to do. But if you want to reduce the income tax
For
rate for
corporations.
corporation, if they will simply agree that okay, maybe because another option is to reduce it gradually
Over a
time.
period of time.
So which we saw in 1997
yeah.
when we had the comprehensive tax reform program back in 1997. The reduction was
Gradual.
over a period of 3 years.
Wow.
So it is also possible that will also be adopted in this case. So if they have a consensus that, okay, we'll reduce it, but we'll reduce it gradually, they can already agree on it now, and it could they could start the ball rolling and come up with the law.
Yeah.
So the most optimistic estimate would be, say, in a year's time.
In a year's time. So that would be by next year.
Yes. But our experience in terms of the past legislation,
It takes
we
time.
have to consider also the reality that there would be a lot of discussion.
Yeah,
And
objections.
aside from discussions, we also have to see our legislators would like to see the figures.
Yeah, of
This is
course.
really very important. What would be the estimate if we say we will reduce the tax rate? What would be the actual impact? Then if we're going to revisit some of the items here, because they're looking at revisiting the tax incentives that government gave to our businesses.
Yeah.
And the plan, what I heard is the plan is to take away those incentives which are no longer necessary for these businesses. So you need to see that in terms of the peso sign.
Yeah.
How much is the impact for this? So it would also really facilitate or hasten the process of amending the tax code if all this data will be available.
Yeah.
That is why we're happy that finally the implementing rules of the TINTA, the Tax Investment Management Law, is already available, and the data from all these tax incentives, the exemptions, the VAT exemptions given to
All those
the
corporate-
businesses enjoying exemptions, it can already be processed. It would be already available, and it would now be easier for the policymakers and Congress to see how much is the impact in this kind of on this industry. How much are they bringing? How much incentive are they enjoying?
Yeah.
Is the Philippines
At a loss.
at a loss, or is the Philippines at a disadvantage?
Yeah.
Are we really subsidizing more than they need? So these are the things that will really hasten. That process will hasten legislation.
Especially the multinational corporation. There are so many incentives given to them
Yes.
just to put up a business here in the Philippines.
Yes.
So aside from amending the tax laws or corporate income tax brackets, do you have other plans or proposals to have the tax reforms which could be implemented to benefit the business sector?
Okay. Last month, we submitted to the Department of Finance a wish list.
A wish list.
A wish list of the administrative issuance, which we hope the BIR will and the Department of Finance will consider revising. Because even at the administrative level, without the need for intervention from Congress, there are already things that we can change. For example, simplification of the tax rules.
Yeah, that's
All
easy.
these rules. We can already have that even without a law passed by Congress.
Yeah. Maybe the Secretary of Finance will just issue regulations on how to implement and fast track all of these paperwork so that it will be lazy.
Yes. Implementing rules of the real estate investment law. So the REITs law, a lot of our businesses especially the malls and the real estate companies, they're very much interested with our REITs law. And would you believe we even have inquiries about the REITs law from foreigners, from foreign companies as far as Singapore and Hong Kong? They're looking into how we will implement the REITs law, and they want to see how they can invest in our REITs in the Philippines.
Wow.
So this would only require the issuance of implementing rules and regulations that is favorable to the business, and the law is already there.
Yeah.
So if this implementing rules and regulation would be something that the business society would find acceptable, then
That's
we
it.
would be seeing this happening.
Wow.
The potential of the REITs law is very promising.
Yeah.
Number one, when you have this REIT structure in place, the potential for employment is there. The expenses for development will translate to money for more people. There would be liquidity in the market because more buildings, more malls, more real estate development would be coming in.
So, next question. Are you in favor of increasing the VAT from 12% to 15%?
Okay, at present, we are not in favor of increasing
So
the
the
value
association
added
is not in
tax.
favor.
We are not in favor of increasing the VAT from 12 to 15% at this point in time. But we know that this is a very easy collection for the government. You just change the rate.
Okay,
Then
that's it.
the same people who already paid VAT will just be paying higher, then it's so easy to collect. But from our point of view, we think that even without increasing the rate, there are other things that can be done with our VAT system that would help the BIR collect more. Number one, you need to plug the loopholes.
Yeah, there are so many loopholes in the VAT system.
Yes. We all know that there are businessmen, some unscrupulous businessmen, who would really purchase fake receipts if only to claim input VAT,
input VAT
and
tax
lower
credits.
their VAT output due liability. And the BIR and the DOF, I think, will take a look at the VAT exemptions, the VAT zero rated transactions that are there right now, and they will try to see which among these are really necessary, and maybe they can change those and subject them to VAT. So even without increasing the VAT, there is a potential. Increasing the VAT rate, there is a potential increase in VAT collection.
So since there would be a loss in the revenue side when we change this rate, the corporate rate, from 30 to 25%, of course there will be a big loss.
Yes.
So what are you proposing to enact a law that would supplement the losses in terms of income?
This is not really our own proposal, but last May, before the election, our association, we came up with a tax policy survey. We sent this questionnaire to all the presidentiables and vice presidentiables, and we gathered their answers. We were very happy to receive the answers of all the 5 presidentiables.
So all of that is all positive.
All of them answered.
So more or less, this would be the one that would augment the losses in terms of corporate income tax.
In their answers, we placed questions like, would you be willing to increase the excise tax on luxury products,
Usually it's always
and petroleum products? And President Duterte, who was a candidate at the time, he said yes. And now we heard the Department of Finance adding the possible imposition of excise tax on sugar products or junk food.
Because usually when there's a loss in one item, usually they always get it from the same taxes.
Exactly.
So they increase the same taxes that almost it's already too high, that maybe because they want to really eliminate those let's say smoking or drinking, that's why they really had to increase those rates.
Yes. So luxury products and the excise increasing or subjecting luxury products, and we even suggested petroleum products because the price of petroleum is very low
going down right now.
So this might be an opportunity to increase the excise tax so that you can have additional revenue. This is something that is a possible solution.
Yeah, I think that's one of the biggest that you could collect.
Yes.
House of Representatives, Deputy Speaker Hiro Kimbo, taking the cue from President Rodrigo Roa Duterte, has refiled a bill that seeks to cut corporate income tax to improve the Philippines' competitiveness. It would amend the National Internal Revenue Code of 1997, which aims to adjust the corporate rate from 30% to 25%. In our succeeding episodes, we will invite Deputy Speaker Kimbo to join us and discuss House Bill number 2379.